Hi everyone, Melanie Grant here, and this is a recording for my Healthcare Reimbursement Methodologies class in discussion of principles of healthcare and reimbursement and revenue management, looking specifically at the end of our part 2, where we look at Medicare payers. This particular chapter will be looking at chapter 8 of the AHIMA's Principles of Healthcare Reimbursement and Revenue Cycle Management, Medicare Physician and Other Health Professional Payment System. Or in other words, the professional payment system for outpatient services when you're not looking at a hospital outpatient service or associated clinic. So let's get started. So for this presentation, we will be using the AHIMA PowerPoint that's associated with the chapter 8 on Medicare Physician and Other Healthcare Professions. Let's look at the types of payment systems here. The two that we're really going to focus on are the RBRVSs and MPFS. As with everything Medicare, they like to use a lot of abbreviations. But this is really just looking at the two different types of payment reimbursement systems that most outpatient physicians not associated with the hospital outpatient and other healthcare services will be looking at. We're going to look at what the RBRVS relative value units are and how we find those, how we describe the geographic practice cost index, and just basically put it all together. This is probably the easiest of the Medicare payment systems, simply because at this point, there's a lot less pieces that go into it. So to look at those pieces, the first part is that we're talking about Part B under the Medicare insurance plan. With Part B, this is identifying specific services like your office visits, diagnostic procedures, some surgical procedures, but not surgical procedures that would be done in, say, a same-day surgical practice, and of course, some therapies. They've given us some of the settings here. You'll notice some of these are similar to our other settings. One question that you might have as you're learning about this is how it defines differently from hospital outpatient services and from other inpatient services. And the answer really is it depends on who's billing. You can be any type of provider in most of these settings, and depending on how your contracts are set up, will identify what type of payment system you're under. So the important thing is you'll have that information already. Now, looking at specifically the outpatient for physician and other health professional payment systems, the first thing is to identify the two parts. The first part being the resource-based relative value scale. This is commonly called the relative value unit, or RVU, because this is what it uses to identify what the unit of measures are. Think of medical reimbursement in terms of each reimbursement item is worth 1 unit, and that unit is multiplied by a dollar amount. We'll talk about that later on in this PowerPoint, but identifying how many units something is given all depends on the various items such as your settings, the types of training that the provider themselves have, and of course, what geographic area you're at. Everything involving the RBRVS will include a lookup for different areas based off of your facility, some which are flexible and change, and others which don't. And then the second part, which is the Medicare Physician Fee Schedule. We've talked a little bit about this in previous references, so some of this will seem familiar and others will be a little different. Now, the structure of payment is all identified by the information we collect when looking at the record. The first thing being those RVUs, or relative value units, which are defined by, you guessed it, pulling up the CPT or HCPCS codes that identify the types of service and the procedures done. This is very similar to other processes that we have with Medicare payments. After that, we look at things that are not really so flexible because they don't change from service to service. They only change between different providers or locations. This includes your GPCI, which is your Geographic Practice Cost Index, This looks at where you're located in the United States and what type of facility you're in. And then there's a multiplier called a conversion factor. The conversion factor, also being based off of these first two items, will just basically say how much each item is determined to be reimbursed. So, for example, you might go to someplace in New York on vacation, or California, where the cost of living is much higher than many areas throughout the rest of the United States. And you might end up having a larger hospital bill or office bill, not hospital, reimbursed to your provider than you would if you were back home. Unless, of course, back home is of an equal value. We'll look at those in a minute, but the important thing here is how providers are reimbursed. Many offices and medical groups will use relative value units, or RVUs, to determine the amount of work that a physician has completed in order to pay them when they're being paid based off of the codes that they bill. This includes a weight that's identified based off of just national research and statistics of how much time does it take to provide this type of service, how much energy and judgment, and what level of knowledge does a provider have to have. It's often referred to with services that the more work a physician has, the longer they stay up at night. And so it includes things like their mental effort and judgment, how much skills they need to have, how much effort they physically have to do to provide a service. Then you have your overall overhead costs, which is generally about 45% of your bill or charge for a relative value unit. These are things like just the cost to keep the lights on, pay for your nursing staff, have supplies, and all of those gloves, and hopefully not the ones that rip too quickly. Last is the cost of insurance premiums. If there's a high amount of malpractice in your area, then your relative value units may increase. So as we look at specific areas with malpractice issues, of course, there's other things in place to prevent malpractice, but the cost will go up regardless of what we do to prevent it or make sure that we're treating our patients the best we can. So because of that, that will affect what your RVU actually ends up being for each service. The next part is the Geographic Practice Cost Index. Again, this is really just based off of the cost of living for your area. Rural areas versus urban areas have different amounts because in a rural setting, there's a lot different types of patients and different types of services that can be done. Whereas an urban setting might have several different offices that interwork together in order to provide the total medical story for a patient. So based off of that, that can affect your payments. We do have an example of what some of this looks like in our book. I'm going to pause the video while I pull that up. So here we have from our textbook, figure 8.1, which gives us an example of how the GPCI is applied. Here we have the RVU, work, physical effort, and malpractice element that are all listed and what their value is. We multiply this by the geographic area to get a total product of our RVU and GPCI, and then we sum it together. This seems like a lot of work, but most of this will be done for you in your system. However, if you ever need to break it down and ensure that payment is being done accurately, you would want to be familiar with how this calculation is made. The total RVU then is determined combined of RVU and GPCI to break down to a total of 2.0492, which is the units or measurements that we will multiply by our conversion factor, an area we look at next. Now, just like in other types of payment systems with Medicare, a conversion factor is something where we take a specific amount that is consistent throughout the year. We apply a specific factor to the actual service that's being done, and we determine based off of our RVUs and our conversion factors how much should be paid for a service. So you can see here How is this done? Well, it's updated yearly and published in a federal register. I have here an example of where to find this information that we'll look at here momentarily. First, though, let's look at what that calculation actually looks at when determining the Medicare Physician Fee Schedule amount, or MPFS. Here we can see payment calculations are determined based off of the RVU work, GPCI work, plus RVU physical effort, GPCI physical effort, plus RVU malpractice events and GPCI malpractice to get a total equation. So we have those little brackets there. So this is basically saying this number times this number plus this number times this number plus this one times this one. All of this calculation, and then multiply it by that conversion factor. So it's a lot of multiplication, and algebra really does come in hand here. If you ever told your teacher, I'll never use it in the real world. So we have an example here, how for example, non-facility payment may apply. This is utilizing from the 2020 publishing in Ohio of the code 99202, which is a new patient office visit on the lowest level. To determine the GPCI application, just like we saw in figure 8.1, we would determine each of those equations. So we have RVU times GPCI for the work value, physical effort RVU times GPCI for the physical effort value, and malpractice RVU times the GPCI for the malpractice level, added up to get the number we saw earlier. How that goes into effect then for a non-facility payment, we then add the conversion factor here. So we have the 2 this one's a little bit different. So this example here is a little different in that the work value is different, the practice expense is different, and the malpractice is slightly different. So this one looks like it pulled up a slightly different code, despite saying that this was the 202. However, let's assume that you pulled up the code correctly and just ignored this part here. You find the work value, the practice expense value, and the malpractice to get your total number, multiply it by your conversion factor, which is a dollar amount for your area. And then at that point, we'll come with a total payment of $73.58. I'm going to pause the video while I pull up some information from Medicare to show how you would find this information. So I have here on the cms.gov website where we can find just about anything dealing with Medicare payments. I've pulled up the physician fee schedule. This can be located simply by going to cms.gov and searching for physician fee schedule, or typing in a Windows Google search and looking up the Medicare fee schedule. You'll notice that this is identifying for the current year of this video, which is in 2023. However, our book is referencing 2020. So as we go through this, we're going to make sure to tell it that we're looking at 2020 as information. There's also tons of related links and downloadable material available from Medicare that can be utilized for payments in the outpatient setting or related to your fee-for-service types of reimbursement. For me, I went ahead and clicked on the current year Medicare Physician Fee Schedule, which brought up this link. And I entered in the information to change the year to 2020. And I told it some of the information I wanted. Now, as I did this, it of course made me say some specifics as to, I'm sorry, I went to the wrong link here. So I went to the Physician Fee Schedule Lookup and then the Medicare Physician Fee Schedule Lookup. My apologies for the confusion. From here, before it would give me information, I have to read through this little overview that tells me a little bit about where this information comes from. And it finally takes me to the search menu here. Now, sometimes you will get a notice from Medicare that says basically that them telling you the payment is not a guarantee of payment, and you have to accept that. I've already accepted that, so when I went to pull it back up, it didn't show us. But when you're doing it on your own, you'll see that. Now, for the code 99202, I've entered a single HCPCS code. And remember, 99202 is a CPT code, which is a type of HCPCS code. I want all the information. So I want pricing, policy indicators, relative value units, and the geographic practice cost index. I don't care if there's any modifiers. I want to list all of it because I want all the information. Now, if I'm in a specific locality, meaning that I want to look up payment information to my area, I'll list that here. And I can even indicate that by typing in my state, which is New Mexico. As I'm searching for fees, because I told it to look by my locality, it gave me specifics to my area only. So my locality number is 0421205. If, however, I had not done that, and I said all localities, it would give me all the different prices that are reimbursable based off of different areas for Medicare. And you can see this goes up to 12 pages. So that's quite a bit of different areas. And those prices will range depending on your area. I'm going to go back to just mine while looking at this so that it's a little less confusing than looking at all payments available in different areas. We can see here the Medicare locality is listed with the non-facility and facility prices. These are different depending on where you're billing from. So as you're determining if you're considered a facility or non-facility, that will apply to all of your coding. Limiting charges simply means that I can't go over that amount and expect reimbursement, but I can go higher if it's deemed necessary and significant services are performed. My work unit is 1. My physical effort or practice expense is 0.908. My malpractice for this area is 1.207. So as we saw earlier, we would simply do the multiplication of each of these areas to get a total work value. So we can see the work RVU and the GPCI here. It continues on, and you can actually pull up various different information depending on what your facility needs. But we're going to stop looking there and go back to our PowerPoint. As you can see, the Medicare Physician Fee Schedule Lookup tool that we just reviewed has a lot of information available. And it looks a little bit different than the imaging here. That's because Medicare has changed it over the last 2 years since the printing of this book. However, the research itself, when looking this information up, has not changed. There's also on the Medicare website a document here in a PDF guide that tells you how to read this and what each item means, because some of this information will also be valuable to you as you're looking at other types of services, like, is there a global period for a surgery that's related to another? Moving right along. One of the other things that we look at in looking at the types of facilities we have is the clinician type in identifying, for example, anesthesiologists versus non-physician providers or MPPs. Based off of the type of provider performing the service, you'll see different amounts of payment for services that have a specific indicator. So once you've determined the conversion factor and the relative value units, from all of that math, you also need to identify whether or not the physician or clinician type is going to receive a full amount of payment. This is broken down by a few things. So your clinician type for participating or non-participating providers versus non-participating providers that don't accept assignments is very important. What that means in a Medicare world is that if you're not signed and contracted as a participating provider, you're considered a non-participating provider. If you accept assignment, that means you accept the payment that Medicare provides. But if you don't, then you're considered a non-participating provider that does not. Many patients won't go to your office if you're not part of the participating provider network, or if you do not accept assignment. And there's some really strong rules on what you can bill patients who are on Medicare if you are a provider or accepting assignment. So it's very important that you're familiar with that. You'll also notice that if you are a non-participating provider, you have an adjustment in payment. We have that here on example in table 8.3 of our textbook. So looking at 8.3, you can see here that that's 8.2. Here we go. 8.3, you can see here that a participating physician will get 100% of payment from the Medicare fee schedule. Reimbursement from Medicare will genuinely be 80% unless depending on the patient's copay or co-share amount. And so the patient would reimburse $10 while Medicare would reimburse $40. If you're non-participating and you're accepting assignment, you get paid 95% of that amount. Medicare will still reimburse you 80% of the amount that they've deemed appropriate for your office, and the patient will still reimburse you for the 20%. But if you're a non-participating physician, non-accepting assignment, you can have a claim limiting charge of 115%. That's that limiting charge we saw before. And they'll give you of 95% of that. So your limiting charge is $54.63, but you will not get any of that reimbursed from Medicare. Medicare will reimburse your patient $38, which is the 80% of the non-participating amount. They will then reimburse you 20% and the remaining $7.13 between your bill and the total bill. That's called balance billing. That means that a patient has agreed when coming into your office to pay those additional amounts, and many patients won't. Other things that will affect payments is what you're billing specifically. So what types of services or procedures? If, for example, you're doing something that's bilateral on both sides of the body, then you're going to get a lesser of the actual charge of 150%. What that means is, just like with multiple procedures, the secondary procedures are going to be reimbursed at 50% rather than 100%. So if a bilateral procedure, a procedure which has a modifier, meaning you did it bilaterally, would usually be double that cost. However, it's treated the same as two procedures being done because it is. Likewise, multiple procedures will always receive a reduction of payment on the second through fifth procedure, and any additional procedure past the 6 or more will trigger for Medicare to do a review and see why you did so many procedures in an outpatient setting. If you have a physician's assistant during surgery, you can also bill that with a modifier 80, which identifies a physician assistant. They will get 16% of the provider fee. So in this case, how much you do at the same time and by whom makes a difference, but it also makes a difference to the patient that they don't have to come back for additional surgeries. And as we mentioned earlier, underserved areas do have an adjustment, such as urban versus rural areas. Most of the shortage areas are also given an adjustment, and that's designated by the U.S. Health Resources and Services Administration. If you're in an area that's identified as an underserved or shortage area, you'll know that because that's something you'll already have in place. You'll receive an additional 10% increase in payment because there's generally about 10% increase in workload. And this, of course, is going to be based off of the service area, not necessarily your company's main headquarters. So we have some calculation examples here. Our first example is Dr. Johannesson, who performs an esophagoscopy. Oh, we weren't supposed to go forward. During the esophagoscopy, she removes 2 polyps using a snare technique. So that's basically on the end of that scope, there's like this little hook that snares the polyps and pulls them off. This is reported with procedure 43217. They then perform an outpatient surgery at a facility-based surgical center in Ohio, which is a Medicare participating provider. So to find out the information for something like this, we would say what type of service this was, which we saw that this was a surgical service, and we have the HCPCS code or CPT code 43217. We would then look at the type of location and see that it's a facility-based surgical center in Ohio. I can actually look this up on my Medicare fee schedule that we had earlier. Let's do that together. So I have code 43217, and the specific area is in Ohio, not New Mexico. For the CPT or HCPCS code, we can see the code here and the procedure, and we would want to always make sure that the short description matches what we think we're pulling up to make sure we didn't have the wrong thing. I can see here that there is a non-facility price of $387 or a facility price of $162.60. When I go back to my PowerPoint, I see the same information here was pulled up and finally adjusted as $162.60. So they've already done the math for me from Medicare, but how they determined it was by looking at this as a facility-based surgery, pulling in the relative value units of 2.8 and the geographic units of 1.0, the practice RVUs of 1.52 and 0.915, and the malpractice units of 0.3 and 1.049 to get each of these that you see to the right, for a total sum of value units of 4.5055. The conversion factor for Ohio, which can also be found here, of 36.0896, or simply rounded to 36.09. Then gives us an adjusted payment of 22.06. And at that point, we look at the fact that our provider there we go. Going back to our provider, 3609. So 4.50 and 3609. When we multiply this, we come up with the total amount of 162.60, which matches the Medicare amount listed for this code. Our next example, which got mixed up a second ago, is a patient who came in to see a nurse practitioner at Sunshine Neighborhood Clinic. She receives a level 1 office visit for an established patient. She does not work incident to a physician and operates within the scope of duties delineated by the state of Ohio. They didn't give us our CPT code here, so we won't pull it up in the Medicare services since that's not what this course is for. This PowerPoint sure does like to go back and forth, but as you can see, the biggest difference at the end here is that once we've determined our total payment, we adjust it at that 85% for the nurse practitioner. Now I'm going to move this other mouse that keeps grabbing attention of my computer and taking our PowerPoint away. We're almost done here as we look at the last bits of how Medicare payments work. One of the things that we want to pull up is looking at specific areas now that affect our payments and give us either increases or decreases based off of programs we're involved in and various areas of quality measurements that Medicare provides. The first one is a quality payment program or QPP. This is something that's mandated through Medicare Access of CHIP and the Reauthorization Act or MACRA. You'll hear a lot of these abbreviations, but basically just know that this is looking at how good the provider is doing and how they meet certain measurements. There's 2 tracks. There's the MIPS and the APMs. So merit-based incentive payment system or advanced alternative payment model. This really looks at a lot of things such as meaningful use and value-based payments that we're already familiar with at this point. When we talk about meaningful use, we look at various reporting information on patients with certain diagnoses to make sure that we are capturing conditions they may have, like diabetics, that we're looking at their blood sugars on a regular basis to make sure that if they do become unstable, we're there to respond right away. We don't want a patient coming into a doctor's office for something routine and having us miss something that we should have checked. When certain metrics are met within these reports, we'll end up seeing an incentive or a penalty percentage each year until 22. So this just ended if you're looking at the current payment system. But for purposes of this PowerPoint in this class, because we are learning about how it has been done, and because you could be doing claims anywhere up to 10 years, although more likely within 1 year, you may still be looking at this incentive program when you start doing bills later in the year. The advanced payment model looks at providers that have really just two things. Either they have really strong track record of improvement methods, or the comprehensive care for joint replacement payment model. This is based off of the amount of patients they have and the services that are listed, and it really only applies if your patient is part of this particular service. So the last thing we have is to look at some of our patient connections. What does it mean when we're talking about patients in the office? Our first patient here is Olivia, who goes out for a run for 2 blocks and sprains her ankle. Her husband takes her to a networked urgent care facility in the community urgent care for treatment. She then sees Dr. McGee, who submits a claim to SuperPayer for her encounter. They use a fee schedule for the physician's service. It's common for commercial insurance companies to reimburse higher than Medicare or Medicaid. They reimburse her $166.65 for the encounter. It's interesting because Medicare would very likely be looking at the encounter we saw earlier of when we had our new patient encounter, 99202. Which, of course, as we saw on the Medicare website, I believe was about 173.96. Wow, my brain was not good at remembering those numbers. Hence the reason that we would, of course, always look up our information. Never try to go off of memory of what something is, but rather pull up your information based off of the codes for each encounter. And if you have questions as you're going through this, remember there's a lot of resources available. That's all for this video. Please let me know if you have questions and have a great day.